Hey folks, it's that time of the week again for Acorn's Trade of the Week review, and we've got a great one for you. We've got really high-performing trade on Hawaiian Holdings that we had this week that we're going to break down. We're going to show you how we found it, what we saw in the charts, how we confirmed it using the indicators. Should really be something excellent that you can take away and apply immediately to your own trading. Let's have a quick look. Obviously, the standard disclaimer up here. I'll give you a chance to read through that and we'll push through. So, trade of the week. So basically, what we actually had is a excellent trade on Hawaiian Holdings. It was a 2-day hold, and we were able to pick up with 3 different exits, but it turned out to be about 100% return across the 3 exits we had, and I'll show those to you as we go ahead. And what I'm also going to show you is a crucial tip, and in fact, a few crucial tips that we used to find this trade, which can be very effective in any kind of trade that you do, whether it's an option, a stock, anything. So, firstly, let's talk about how we found Hawaiian Holdings. Why were we even thinking of shorting it in going long on the stock in the first place? And this comes back to your scan. When you're looking for opportunities, you have to know what you're looking for. So many people just stumble through the market looking at chart after chart after chart, or reading the news or listening to the TV, hoping that the idea will find them. That's not a very good way to invest. If you're an astute investor, you should know what you're looking for. And if you know what you're looking for, you should know how to scan for it so technology can find it for you. If you don't know, stick around to the end of the video and we're actually going to invite you to one of our free classes where we teach you this. But basically what we looked for here is we were looking for stocks that had a really good opportunity of a big burst up through earnings. And this was a long that we found by looking for stocks that had great institutional ownership and a bunch of other factors. And this is what we found here. We found that the stock was 92% institutionally owned, which is very high. 17% increase in insider transactions over the last 6 months. So the guys that run the company are buying their own stock. That's usually a good sign. A 3.2% increase in institutional transactions, also a good sign. And one of the kind of counterintuitive things was that there was a 20% short float. And what that means is that 20% of this publicly traded stock was being bet against by traders. So people betting against the stock and shorting it. And why that was so the common person, who has never done a lot of shorting before might think that at face value that sounds really bearish. Well, gosh, if 20% of people are betting against the company, that must be bad. But think of it a different way. If there in fact is a really strong undertow pushing this company up, then if this company has a big burst up of price, all of those shorts have to cover. They have to buy back to get out of their position where they're betting against the company. And this creates a short covering which can dramatically shoot the price of the stock up. So I really liked that there was a high percentage short float combining with these other really good factors. It also had a P/E ratio of 12.46, which is quite low, especially given how well the airlines have been doing. And this isn't an airline. And also then we looked at the analyst target. The analyst target was $7.32, where we were also under that at 6.73. So a perfect storm of all of these kind of fundamental backdrops to what could potentially be a very interesting play into earnings, which was coming out next day. So now we know that we have a stock that meets our scan. Now we have to confirm it using the chart. And so when I looked at this chart, what I really liked about this was that it was a breakout trade. So you see this level around just under 660. This stock had a real trouble breaking through this. It was a very important level, of course, because not only was this where it gapped down from, which creates a strong point of resistance at that level. If anyone has heard the term filling the gap, you'll know what I'm talking about. So it gapped down from here before, rallied up, ran right into it again, would have been a great shorting opportunity there, shot straight down with incredible power. So we know that this level represents significant resistance. So if it can break through, that must mean that there's some substantial power that's allowed it to push through. Where does substantial power come from? The smart money, the big money, the traders that know what's going on, the insiders. So if they're pushing this through ahead of earnings, something's probably going on. And so this breakout confirmed that on the chart, everything's still looking good, and we should now look a little bit further. So then we look at money flow. And money flow basically tells us what all these other things we've just talked about confirm, which is that the sentiment within investors is positive or negative, and in this case, positive. As you can see, as the stock has been rallying, money flow has actually been rallying to new highs as well, and continually making newer highs, new highs, new highs, all throughout that money flow, showing that money is piling into the stock. Now you might think, well, John, it just looks exactly what the stock looks like, so of course it's going up. But not so much, not at all, in fact, because often we've found companies where price has been going up, just like this, but the money flow has actually been going down. And that can be a really good opportunity for shorting a company. Okay? So this is one of the things that you can really use on any of your trades to confirm, is price going up along with sentiment, or is price going up leading the lambs to slaughter? But in this case, all was good. So what happened next? Well, the stock did report positive earnings and actually shot straight through and went right up to 742. So I'll just show you that again. Went from 660, bang, straight up to 742. And in fact even went higher today when I took this screenshot. So that breakout was positive. It was better than expected earnings, and all of those seeing that trend beforehand were able to make a high probability, high profitability trade. Now I traded it using options. There's a specific strategy I use in earnings season that allows for some significantly profitable returns. This was how I traded Hawaiian Airlines. It's actually a screenshot from my Interactive Brokers account. I bought that there on July 23rd. Bought some $7 call options that expired in August. And I sold them as I saw the stock shooting up. I got out in 3 different stages. You can see 6.45. I sold it at 25 cents, then 6.50 a little bit later at 30 cents, and then again about 7 minutes later at 40 cents. So making approximately an overall return of about 100%, and on the 45-cent mark, 200%. So significant profit in a very short period of time looking at a play that was highly set up. Now, options, of course, is risky, but there are many ways to trade that. You can use stocks, you can use options, but the key is no matter what you do, know exactly what you are doing. How did you find it? How did you confirm it? Was it exactly what you were looking for? And so, I often ask this, I do this in every video, what is your strategy? What are you looking for? And if I gave you a piece of paper and asked you to draw exactly what you want from a stock and what it should look like when you buy it, what would you write down? What would you draw? If you don't know these things, you're really fighting the trend. You're really wasting time, because trading is about living better. It's about having your money work for you. And you should always run your strategies and run your portfolio like you would a business. You know how much you're willing to risk, how much you expect to gain, when you're going to cut those losses and try a different strategy, to know what the strategy is, have a business plan, all these kinds of things. And you should then be able to set that up the night before, like I do, set these trades up the night before, know exactly where you're buying, exactly where you're selling, and where your stop loss is, and then put those things into play so you're in and out. As you saw before on that trade, I was in and out by 7 o'clock in the morning, and I can do whatever I want for the rest of the day. This is a recent photo of me doing just that, hiking the Canadian Rockies after trading successfully in the morning and having a couple of trades in the background being looked after for me by my brokerage. So if you're not doing these types of things, come along and register for our free trial. Every week we host 2 trading sessions in Tuesday and Thursday afternoons where we teach the strategies that we're doing. We actually also show you what trades we're about to do next. Just like Hawaiian Airlines, we announced that we were going to trade that a couple of weeks ago. You can attend these. We also have a webinar coming up that we'll also get access to, which is all about trading options during earnings season. You'll get access to that too. So all you need to do is click the link below, and that will actually take you, or it might be above. Just click that link. It will take you through to the registration, and you'll get all this stuff. You'll get the 7-day trial of our gold membership with those live training sessions, 7 days of our emails where we tell you what we're about to pick, what we're buying, where we're buying, and what the chart looks like. That should narrow down your research time, or at least give you some more ideas very quickly. And I promise you, if you spend the time to come to the sessions or watch the recordings that we send out, even if you never end up doing any of these type of strategies again, you'll at least come away with some knowledge that should dramatically cut down your time and effort that you're having to spend on your own strategies. All right, everybody, thanks for spending a few minutes with us, and we look forward to seeing you on the other side. This is John Seville, Apple Trading.